Sponsored by
दांतों व मसौढ़ों की समस्याओं का पूर्ण समाधान।
The recent challenges being faced by India's two hottest startups, edtech firm Byjus and fintech company Paytm, have shaken the core of country's technological sector. In the latest, Paytm founder Vijay Shekhar Sharma resigned as a part-time non-executive chairman of Paytm Payments Bank Limited. The unexpected step came ahead of the March 15 deadline to wind down its business. Described as the symbol of India's rapidly emerging unicorn ecosystem, the apparent downfall of the multi-billion-dollar companies has left a starking scar on startup sectors. Paytm founder's resignation led to the reconstitution of the board of directors with the appointment of Srinivasan Sridhar, former chairman of Central Bank of India, retired IAS officer Debendranath Sarangi, who is the former executive director of Bank of Baroda, Ashok Kumar Garg, and former IAS officer Ranjani Shekhri Sibal. The major downfall for the fintech company came when it was hit with regulatory limits by the Reserve Bank of India. The central bank stated that the decision came after the Paytm Payments Bank's repeated failure to comply with banking norms and KYC requirements. The company needs to stop all of its banking services from March 15 onwards, which subsequently led to Paytm share price plummeting by 40% since RBI's announcement. On the other hand, in the case of Byjus, the edtech firm has been rocked with money laundering accusation against founder and CEO Byju Ravindran, and the investors are of the intention of ousting him from the company. Additionally, Ravindran is also facing heat from the ED concerning violations of the Foreign Exchange Management Act. Once valued in billions, the company's worth has now plummeted drastically from its peak. Although the factors that have contributed to the crisis being faced by Paytm and Byjus vary, their concurrent declines raise concern within the Indian technological sector, with analysts anticipating that repercussions will intensify. A research vice president at market research firm Counterpoint, Neil Shah, stated that the problems being faced by the once-star companies are a wake-up call for other companies to comply with requirements in order to prevent manipulation and ensure authenticity. All of these crises directly indicate that the companies would be facing weak investor confidence. Paytm investors are trying to think of its future steps and whether restructuring the board will help in rescuing the company's image. While majority of investors in Byjus unanimously voted to remove founder Byju Ravindran and revamp the board, the varying challenges may potentially add to the already ongoing debacle in the global tech industry marred by sudden and huge layoffs. No tech company by far has been able to stay away from it, be it Google, Meta, or Wipro.